Greetings. You are now tuned into the vault. This is your host, Trust Christian, Own Nothing, Control Everything. Just wanted to do a post today. I am doing an episode every day for the month of December, and today we're going to be talking about wealth versus rich. And I'm going to share this from a very interesting perspective. If you all know, it's Trust Christian. A lot of times, I'll share with you all what my mentor said, but I definitely want to thank you for listening live or in the replay. I just wanted to kind of let you all know that when I first started sharing trust and my expertise on trust, a lot of times I think a lot of people, they look at the information, they say, well, aren't trust only for wealthy people? And one of the things that, thanks Bomo for turning it live. I think one of the things that really just kind of blew my mind was how unsimplistic or how complex people tried to make it. Like, even when I talk to people about trust, regular individuals, and they have to be stated as just that, because they say, oh, that sounds pretty complicated, or it sounds complex. It's like, did you understand that I've sat in rooms where people have trained their children at 12, 13, 14 years old in trust, and to hear an adult say that, it's just like, wow, it lets me know how unknowledgeable the public is about, uh, you know, what simply is nothing more than a contract. A trust is nothing more than a contract, and I really want to, on this episode, convey to you all a specific thought process about what I've been trained in, what we train individuals in the vault, what we train individuals in trustee training. We train individuals to focus on wealth preservation, not just growing the wealth, but preserving the wealth. And when I say that, a lot of times, a lot of people are so focused on getting rich. Everyone's trying to gain capital. Everyone wants to get capital. I was at an event even today again. This is a wealth conference, okay? So everyone in the room's talking this word wealth. No one's talking about being rich. No one's talking about getting money. They don't even use those two words, money, and they call it capital. So we're sitting in a room, and these individuals are talking about. So there's two types of people in this room. There's asset managers, and then there are people that are pitching to get money for, whether it's their fund, whether it's for their quote unquote idea. You don't really see a lot of VCs, but you do see a lot of private family businesses, private family business trust. They won't say that they're that, but they're private family businesses, and they have so much money that they need to invest and to diversify their portfolio, so they buy little businesses up. So that's how they stay wealthy, is by buying little businesses up. But what I really noticed was that the lack of focus on getting rich. I'll share this with you. It might come as a surprise to you, is that when you're looking to preserve your wealth, you're focused. Most of these individuals, these asset managers, and when I say these asset managers are managing triple digit M's. We're talking over 500 million, 700 million. We're sitting in a room with individuals that are managing $1 billion in portfolio. I got a chance to meet one of the royal families for Brazil today. She is managing over $1 billion in under asset management, and this is not even her money. She's managing someone else's money, which to me is kind of cool, but it's not cool because in private trustee training on our side of the table, we teach trustees to manage their own money. We educate individuals, not their own money, but manage as a trustee of an estate, whether it's your family's estate or not. So you wouldn't. It's not that you can't manage other people's families' money, but I mean, why wouldn't you be putting your family first? Because that's how all wealthy people think. They don't focus on getting rich. They have a identified skill. They have an identified trade that they're going to go in. They're going to dominate in. Once they dominate in that, they're going to focus on wealth preservation. Wealth preservation comes from almost diversifying your portfolio. I think people end up diversifying their portfolio too quickly. In my humble opinion, I think that I see a lot of entrepreneurs doing a bunch of different things and they're not focused on what is it that they do the best. I was talking to an entrepreneur earlier today. She's a trustee in our training program. I told her, you can best believe Trust Christian will be and is and will stay one of the best trust managers, trustees out there, because I stay focused on the craft. I stay in an environment where we focus on wealth preservation, not just on growing the actual money. Because from what I saw, these individuals that are maintaining $500 million portfolios, $700 million portfolios, billion-dollar portfolios, they're actually focused on not doing anything wrong. And I understand why they're focused on that is because they're managing someone else's money. So obviously, it's like football or any other sport. If you're not calling the right plays, if you're not winning games, you're actually going to get fired if you make the wrong plays. And think about it. I can let you all know that these individuals are not making deals anything less than $20 million. It's not even something that they're thinking about. They're going no less than $20 million. So you think about it, if they make a bad play with $20 million, they're making a pretty bad move. But traditionally, they're going to be even bigger than $20 million. So sit in a room with these individuals, and they're focused on holding on to the money. They're not focused on putting it to work. From what I heard, a lot of these individuals were focused and stated that there's a lot of capital in the marketplace that they say is playing the sidelines right now, whether it's the stock market, whether it's the housing market, whether it's even in private equity right now. A lot of them are playing the sidelines when it comes to them putting their money in the marketplace, giving asset managers the opportunity to grow that wealth. Right now, when you come into the private side and you see how families are structured, there's a lot of fees when you're associated on the private side and growing the wealth. So they're not focused on getting rich; they're focused on preserving it. So you see a lot of times where the families end up just holding the wealth um, as opposed to growing it. And why aren't they growing it? Why aren't they focused on growing it? They're not focused on growing it because the fees to find a new asset manager, the fees to actually find someone to grow the wealth are right now, they're saying, are a little too high. They're trying to change the model of the marketplace where it's more focused on performance instead of focused on fees. But then when you see traditional older families that um, you know, multi-billion dollar families, they don't care about fees. They feel like their portfolio is going to continue to perform, so they don't mind paying, a group or a equity fund or a institutional bank to grow the funds, and things of that nature. So I know it might sound like I'm all over the place, but I'm giving you the level of conversation that I've been sitting in for the past 24 hours. Actually, it's been the past 3 days since Monday now, and to see the level of conversation that they're talking about with the letters and the numbers that they're talking about is very, very interesting when we talk about growing the wealth. But really, the main focus right now in 2017, from what I've seen, is really a lot of wealth preservation. I didn't see a lot of focused on growth. The individuals that were in the room that were trying to get rich, the individuals that were looking to raise capital, were all people that had ideas. That they didn't have any money. They were trying to get someone to invest in them. And I felt like me and my team were able to sit in a very strategic position because we don't we're not looking for capital. We have capital. We're not looking to have individuals even manage our capital. And if they are, we found a very unique individual. He is a ex endowment manager, but he's an endowment advisor. So when we talk about growing your wealth, or preserving your wealth, wealthy people preserve their wealth inside of endowment funds, which are contracts, but endowment funds with schools, colleges, hospitals, libraries, post offices, things of that nature. They speak a specific language when it comes to endowment. So when we had a lot of real estate brokers come up to our team this week, and they were pitching that they were starting this real estate investment trust, that they're a real estate brokerage firm, and things of that nature. And it was really interesting because that's actually the third priority on our investment portfolio strategy at the vault. And to hear these individuals kind of make it seem like they, oh, we've been acquiring real estate in Reno, Las Vegas, and the Bay Area and Sacramento for what is that, for years now. And it's just like, okay, I don't think real estate is a bad place to park your money. I'm very aware as a wealth manager, or as a trustee, that wealthy families hold their money in art. So that's why we're going to make it a point to get to the art expos here over the next year. and get to the more, because wealth is passed along once again through from one generation to the next. So wealth is, like I say, and that's the focus too as well. I want to make sure that you hear that term, the wealth preservation aspect. Individuals are passing on wealth and holding wealth, intangible items such as gold, such as gold, such as what is that, such as art, and such as land and real estate. So let's just start from that list at the top. We actually got pitched an idea from an individual that they're having people recycle their cell phones, and they're acquiring gold, and I guess they're giving individuals the opportunity to help them expand their recycling company, which to me is not a new thing. It's actually a trend right now with even the big cell phone carriers, because they are doing their own recycling of cell phones. And so it's even more challenging now when these companies have transitioned to a lease option payment plan, where and that's how they get the cell phone back, so they can recycle the cell phone. So to see that level of pitch, to see that idea of preserving the wealth by taking the gold out of cell phones and having someone invest in such an idea, or gain equity inside of a company that has such an idea, I think it's a really cool idea. The second place is art. Like I say, our team will be making it a point to explore more and more art type events. We ran into some art collectors and art dealers, and brokers this week, and these individuals are from Spain. They talked about the market, shared a lot more insight. See, ladies and gentlemen, I'm sharing with you all who you need to be talking to. You need to be talking to individuals that have tech startups that are focused on recycling cell phones. You should be talking to individuals that are in the art community, because that's how wealth is passed on. And then we get to the last one, where once again you see real estate's at the bottom of that list. Real estate's not at the top because, I sat in a room. I'll share this with you all. I sat in a room. I sat there and I seen a board of a panel of asset managers. These are asset managers here. These are guys that are managing portfolios of $100 million or more. 5 of them sat on the panel. 4 of them across the board. When they asked them, where are you taking $50 million? Where are you taking $50 million right now? Where are you taking that? What is your data analytics for you to look at a market and say, we're going to place $50 million? Across the board, 4 in a row said, we're looking for areas where people are going right now, where there are large migrations of people. And then it got back to the actual host of the panel, and he says, all of their analytics are wrong. You don't go where people are growing, the number of population. You go where the median income is rising. And I said, wow, that's someone that's not afraid to go against what is considered common knowledge. It actually is the most accurate statistic for you to even want to put your investors' money to work. He said, and that individual was very strategic in his selection of investments. Why? Because he said all of the real estate property that they're acquiring in his particular fund portfolio was focused on cash flowing houses. They weren't focused on buying and selling. They were focused on buying, holding, and cash flowing for the long term. And they're cash flowing in the Midwest. I'll share that much with you. They are cash flowing in the Midwest, completely in the Midwest. They're not focused on major cities. They're actually focused on what they consider secondary markets. But I mean, for example, a lot of people wouldn't think that Minnesota is a sexy market right now. A lot of people wouldn't think that Iowa is a sexy market right now. But just guess what? Minnesota is holding the Super Bowl this year. When you go look at Minnesota as a market, they have maybe 3 out of maybe the top 5. We'll say in the top Fortune 500, they have at least maybe 10 to 15. In the top 15 Fortune 500, they actually have maybe 3 to 5 of those corporations inside of Minnesota hiring as we speak. Minneapolis as we speak. It's a growing city. I went there this year so far. A very growing city. They have the Mall of America. You all are familiar with the Mall of America, and they just built a new stadium. So markets where stadiums are being revamped are good places to have that money. But specifically, when we were listening to this individual, the one that I'm talking about the markets and preserving these individuals' wealth, he said, we're going where the median incomes are going. So when you all right now are saying, hey, where am I going to park my money in real estate? You should be looking into that. Where are the median incomes growing? Not necessarily, oh, where are people moving to right now? There's a large influx of people moving here and moving there, and income tax situations are going to change. So what? It's not about that. It's about where's the incomes growing in the United States. That's for a reason. Can an individual look past the population growth and look at the reason why that money is actually going and growing in that area? These are the things that you think about when you're looking to preserve your wealth, if you're going to preserve your wealth in the real estate. So that's why I brought up that example. And so, I really share this with you all when it comes to wealth versus being rich, is to really focus on getting in environments where they're focused on growing wealth. If I'm telling you all to think about real estate, why wouldn't you enroll or go invest as a company to get into the local real estate investor club? You may never make an investment in the next year or 2 years or 3 years, but why not be around those individuals that are focused on real estate, so you can have the network available to you? I think that's what our team distinguishes ourselves when it comes to trusteeship, is that we're able to go into different environments because we're trustees. We're not limited to certain specific asset classes or capital allocation. Most of the time, most of our families are going to be families that are managing their own funds. It doesn't matter how big they are. Usually they're going to be family units anyways managing these entities. It's not going to be having some wealth manager come in. Traditionally you're going to see these guys from wealth management come in from private banks, UBS or Bank of Mellon, these type of banks and institutional banks, and trying to come in and manage a private family's wealth. That's not what we're looking to do. And these guys are trying to give you the glory run of how many returns they're going to give you. They're giving you the data analytics. They're giving you risk management, cost analysis and all this type of stuff. It's like, all right, well, let's go back to our investment strategy as trustees. But specifically, this is what you learn in trustee training. I'll give you one place to park the money. You're going to park your money in an endowment. How long is charity going to be around? Forever. That's why we're in that asset class. That's the primary asset class. Did you know America's the #1 givingest country in the world? I go to church every week. We giving money to Puerto Rico. Where else are we going? To Cuba, to Florida Keys for those situations that happened with the hurricane. There's always some mission trip at church. So understanding that charity, and that's something that my mentor, he always asked that question. One of my mentors always asked that question. He says, how long is charity going to be around? Forever. So that's where we park our money as trustees. That's how you park and grow your wealth. And you preserve your wealth. You preserve it in charity. Well, guess what? School is charity. Hospitals are charity. They're 501c3s. Because we have foundations, we're able to preserve our wealth by putting it into other 501c3s. We're not focused on getting rich. A lot of people are focused on getting rich. If you get up every day and you think about getting rich, have fun with that. But I think that if you focus on being born wealthy, if you turned on that switch in your head and said, how would I think if I was wealthy already? How would I think if I had $100 million that I was sitting on? How would I think if I had $500 million? I think that, that's the wealth mentality. I understand that there is a programming to go to school, get a good education, and get a good job. And in turn, when you get a job, you're gonna make $80,000 a year, $100,000 a year. You're gonna make less than $250,000 a year. I was sitting in a room with people this week. I talked to a hedge fund manager today. It wasn't a rhetorical question, but I kind of knew the qualifications of what it takes to actually invest in a hedge fund, most traditional American hedge funds, and so just threw a question out there that I knew the answer to, so she could give me the answer to see if she actually knew what I was talking about. So she said, I said, so what's the buy-in to your hedge fund? She said $250,000. I said, oh, okay, you're looking for accredited investors. Yes. So to be an accredited investor, you have to generate a certain amount of money a couple years in a row, or which is $250,000, or you have to have $1 million in assets outside of your house. And so, just talking to her about that, it kind of lets you all know. It's like, so you all as a team, if you're going to be wealthy, you're going to hang out with other wealthy people. Okay, so I'll give you a heads up on that one. So if you're going to be hanging out with other wealthy people, why not partner? And just to let you know, I will highlight that wealth is passed along not only through families, it's passed along through communities. Why do you think I'm at a networking event with other wealthy families? We're at a networking event with other families because Families work together. That was something that I really saw this week so far, from this event that we went to with some of our from some of our trustees from trustee training, is that there's a lot of, when you get to a certain level, especially at a higher level, it's interesting. It's not really at the lower level, it's at the higher level. A lot of the higher levels, they're doing co-investments together. And they talk very funny. Like, if you sat in this meeting, you'd be probably lost very quickly, because they talk about GPs and LPs, and you're like, what's a GP? A general partnership. When you hear LPs, they're talking about limited partnerships. They're talking about being able to do partnerships on very limited basis. They're talking about giving capital but not giving expertise. They're talking about investing with expertise and not investing with capital. So many proprietary aspects to it. Very, very beautiful. Very beautiful to see that, the more wealth you acquire, the more you actually are dependent upon the community that you're in and that you're working with, or the people that you associate with. So it's really awesome to see that. And so, I hope I didn't lose my point, but the point is being in an environment where they're talking about wealth preservation was one of the most powerful things that I saw. Thanks, Trey Stone, for tuning in live. I appreciate the compliment. And like I say, I opened this door for you all as well in trustee training, because I didn't, and out of all the people at this wealth conference, I met one accountant and didn't meet any attorneys. So you're trying, and what's funny is when they finally brought up taxes, they were scared about it. They were all talking about, oh, well, we don't want to deal with that subject. We're going to leave it to attorneys. I'm going to let you all know that Trust Christian and the Vault, 1% of the lawyers in the country are educated on what we teach in the Vault. 99% of them are going to keep individuals. Most of the individuals that were in this environment were in living trust, revocable trust. We don't deal in those entities. Those are statutory. We deal in private trust. We deal in private international trust. That's what we focus on at the Vault. So when I saw these individuals, even the royal family from Brazil, it's like, okay, so what is your asset allocation to the United States? How do you even have a hand inside of the United States? Or most of your assets held outside the United States, or most of your assets held in Brazil? These are the type of questions that I'm asking wealth managers, because if you're looking to grow your wealth, you're going to diversify your portfolio, not just be in Brazil. You're going to be focused on, another country, specifically the United States. And even if you all want me to do an episode on real estate, I can, because the real estate, to me, was one of the most exciting conversations that I heard this week. I mean, this week I could share with you all why some of the asset managers feel like the real estate market is one of the better markets to be in the United States right now. I've traveled quite a bit over the past year, and I can tell you right now, this is a tourist country. The United States is a tourist country. If you have not faced that fact, you are going to see that more and more over the next coming years, that there are a lot of countries that are acquiring more wealth as we speak, and they want to visit the United States. They want to see this place. It was funny, one of the speakers from the stage said everybody internationally wants to own a piece of real estate in the United States. They want to say that they own a part of the United States. And it's incumbent upon you to, I know that we had another real estate individual come up. He said the real estate market is getting ready to start booming again. We're talking about wealth managers here. I'm not talking about people that are on MSNBC and CNBC, all these guys that you see on there. I'm talking about people that actually have, once again, minimum, the controller of the environment had $500 million under asset management alone, and had billionaires that he's actually managing their wealth. So we're talking about billionaires. We're not talking about people that, they're columnists for a newspaper. You know what I mean? You got to know where you're getting your facts from and your information from. And I'm talking about going directly to the individuals that are managing the funds, once again, that are focused on not losing any money at all. So they rather do 2 deals a year and look at 100+ deals than to do 5 deals and 3 of them go bad and 2 of them work. So I'll repeat that again. They rather look at 100 deals and only do 2 in a year, then, once again, they can look at 100 but do 5 and 3 of them go wrong and 2 of them go well. That actually looks bad. So they rather just do two good deals and don't do any bad deals. That's what these individuals are focused on, not doing any bad deals, because they're dealing with so much capital that they don't want to mess up. But I understand, when you're not managing or dealing with, quote unquote, your own money or your family's money, it's easier to say, hey, I don't want to make a mistake, and it's easier to not take risk or take risk when you're dealing with other people's money. But from what I've heard this weekend, they actually say that the real estate market is getting to be in a continuous uptrend, and in an uptrend right now. And it's just like, wow. So, to give you all ideas, I don't want to get too far off the handle. I know that this is getting a little bit longer than than normal, but you know the wealth opportunity is right here in front of you all, folks. To get wealthy, especially in the United States right now. I mean, it's ungodly. It is godly, but it's just awesome to see the opportunity in front of you all to grow your wealth right now, at an enormous rate. But one thing I didn't see any of these individuals talk about, which I understand because this wasn't a structure environment; it was a finance environment. It was pure capital, so it was not. It was focused on asset management. It wasn't focused on like I say, it wasn't too focused on the preservation. It was actually on wealth growth, and growing the actual money itself. So I just want to let you all know how many people are helping you and talking to you about focused on putting your money in the correct tax position. That's the first key to wealth that we talk about in the vault, that Trust Christian talks about, which is putting the money in the correct tax position. If you don't, if you don't put the money in the correct tax position, what do you think? How are you gonna lose most of the money? You think you're gonna lose it from, once again, those individuals? No, they're not gonna lose the money. That's not their job. Their job isn't to focus on taxes. So their second job is to not lose the money. So the first place is taxes. Why? Because before they ever able to do anything with the money, they have to deal with taxes. So the first thing you want to do is put your wealth in a correct tax position. That's called tax avoidance. That's the language that we speak at the vault. Tax avoidance is perfectly legal. We give IRS validates Supreme Court cases. Supreme Court cases are the cases that we use to validate our positions in the marketplace. That's why I even saw something on TV today where now they're trying to subpoena Donald Trump. He's been in office for how long now, and they're still trying to subpoena him for his financial records. Like, are you serious? This man's living in trust. He has a foundation. His records aren't open to review. But you all remember when Trump was trying to get at Obama for his citizenship. That's called propaganda. Face the facts. It's propaganda. Donald Trump has no tax records to show. Otherwise, they would have been shown already. Why? If they were public, they would have been shown. Since they're private, you don't get to know. Thank you, Bomo. And I do my best, Bomo, to strategically place myself and our trustees in this position. To let people know that, as quiet as it is kept, trust our contracts, and we should know how to contract regardless if you have a trust. Why? Because it's unfortunate that a lot of people don't know contracts. And you want to know how you keep wealth? By knowing contracts. You get rich by getting money, acquiring fiat and paper. But a lot of these wealth asset managers, they were talking about crypto, and stuff of that nature, but I mean, these are kind of older people, so they're kind of scared of it. They want to invest in the technology. They're going to invest less than 2% of their portfolio. Wealthy clients' money. If I'm letting you all know that they're not doing anything less than $20 million, that's still a small portion of the portfolio that they're looking to even invest in crypto. But you're always gonna find some aggressive asset managers. But I can let you all know that yes, they weren't focused on getting rich off of Bitcoin right now. They were more focused on some of the more tangible places to park the money in times of great depression or recession. But I can let you all know right now that these individuals have a very, very positive outlook on growing wealth right now. And I think the time is for you to take responsibility for your family and grow wealth. And I think that that's the speech that you're going to hear from the vault. The theme over the next year is working together more and more as a community, as a private trust community, and moving forward in that capacity, because wealthy individuals work together. And that was something that I really saw. A lot of the real estate deals, the major real estate deals that a lot of these guys are doing, the more money you have, the less you can do. So they're gonna give money to someone that's starting up, a private equity fund, or someone that's starting up a hedge fund that's able to allocate those funds privately and manage the money, and not really give back any losses or anything, but grow the wealth, or at least hold the wealth. And so that was just something that I saw. I saw a lot more teamwork at the wealthy level. And that's something that I'm going to be pushing more and more at the vault, is focusing on growing the wealth as a team. That's something that I really saw. I saw families working together this week, and I know that a lot of middle class and poor people don't focus on growing their wealth as a team. They're focused on being individual taxpayers, and I just saw that's the difference. Is you don't force your children to work with you. You set the example for them to want to work with you. You set the example. You go out, you miss a couple games, you miss a couple brews with the friends. You grow your family wealth for generations. So they know, you know what, when I have to make those sacrifices, I will. Not because I'm making a sacrifice for myself, but they're making a sacrifice for their family. Because it's family first in this environment. Families grow wealth. Individuals get rich. So I'm actually going to go back and retitle this Family Wealth versus Individual Rich. Individual riches. Because that's what it is. You know, I deal with clients that have that are professional athletes. Some of them are celebrities, and once again, they're individuals. Some of them do have teams. They have their families working with them. But it's so funny that when individuals end up getting money, a lot more money or capital, I should say, they end up trying to keep the closest people to them closer. Their family. Their family ends up working with them a lot more. The more money they acquire, the more capital that they have, they end up having their family work close together. Another thing I saw, and of course I'm at a wealth conference, at a wealth, private meeting, and of course most of these individuals are second and third generation, so it's easy to hold the wealth together. I mean, we're talking about people that are, supplying Ford with auto parts, and their family's been doing it for 3 generations now. But the third generation doesn't want to be limited to auto parts, so they want to invest in cannabis. So their asset managers just giving ideas on how to deal with second and third generation, wealth, because you do have a mindset change from the second and third generation sometime on how to grow the wealth and preserve the wealth. And that's interesting to me, because there should be an outline in the trust minutes and in the family policy that this is the way we would strategically move. And it's interesting to see some of the elder asset managers talk about how they were growing that wealth and how they were working with the third generation, and fourth generation for that matter. And I just really wanted to share that with you, and I'll wrap up on that. Is think about your children, and I encourage you all to really think about that. Like, how are you going to set the example for teaching? I share with you all the time. Family law is private law. Contract law is private law. How are your children going to know how to contract if your family's not focused on being private? If you're not privately educating your children, you cannot expect the public to educate your children properly. It's such a disadvantage, and that's one thing that I see, is that wealthy families end up working together, educating themselves together, through many different ways. And that's how wealth is passed on. It's passed along through families and private communities. And that's something that we're going to continue to do over here at the Vault, with our trustees. I'm proud of my trustees. I'm proud of you all for taking the time to invest in being private and focused on growing wealth for generations to come, because we are going to die. They always tell you 2 things. They say it's 2 things that are guaranteed. You're going to die and pay taxes. Well, one of them is not actually true. One of them is. The first one is that we are going to die. The second thing is that you don't all have to pay taxes, first of all, because persons are legal entities. So it's all about being in the right person or being in the right business vehicle to pass on that wealth tax-free, and that's called practicing tax avoidance, and that's utilizing the proper structures to actually preserve and pass on that wealth. And so I just wanted to really share that with you all tonight, is that wealth is passed along through family, and you get rich by being an individual. So I think it's incumbent. I do my best to give you all thought on how you're dealing in your particular businesses or you're in life, and possibly separating from people that are not going to be in those environments with us and with you. Is very, very important to be in those environments of growing wealth together. And I just really saw that to be able to think like that is a very, very powerful position. I had one individual tell me before. He said there's no such thing as strength in numbers, but that's why we don't do business together. But I was the one that would always come to this individual with deals. I always had deals for them. Why? Because they were good at what they do, but they don't believe in the power of doing business with other people in numbers. And I believe that you need to create a syndicate. I believe that there needs to be created order needs to be created. And I think that wealth, is one of the funnest places to be thinking and talking about nowadays. Instead of talking about some tax bill that's going to affect public people, that when you hear people talking about the tax situation, guess what? That already lets you know that they're in a public capacity. They're not in a private capacity. I promise you. The fact that they're talking about it. Taxes come from legislator, and legislative is public. We practice tax avoidance. It's perfectly legal. Gregory versus Helvering is a Supreme Court case. You can look it up. We can talk to your attorney. Your attorney should know that. Your attorney knows about tax avoidance. Business attorneys know about it. But guess what? Most of them don't know how to do it. Why? Because they're in a public capacity. It's called a state barred situation. They're focused on that state's entities. So look forward to connecting with you all and, doing business with you all, helping you all grow your family's wealth privately, and being a catalyst and growing those relationships. And look forward to hearing from you all. Christian at trustchristian.com. Once again, just doing an episode every single day. I'm going to give a good synopsis, most likely Friday after I finish up this week with these wealth managers, and kind of get back to you all and kind of let you know more of the conversations that we had. But there were some very beautiful conversations. I mean, very high-end conversations, because if you're not making over $20 million, you're kind of sitting there wondering, like, well, what's the point of talking? What's the point of even listening? And I think that you have to expand, you have to stretch your mind. Once you stretch your mind to $20 million assets under management, you will never go back to thinking about making $80,000 a year, $100,000 a year, $120,000 a year, $150,000 a year. You will be thinking about managing 20 million plus and growing it. And I think that when you expand your mind and put yourself in those environments and force yourself to learn, you'll feel like, wow, there was so much more that I was not getting. Right. And there is. And there's so much money out here. I mean, if you would have heard these guys talking this week so far, it's so much money right now, they say, that's just sitting on the sidelines for great ideas, for great businesses that they're not investing in, because they're not getting the looks that they want. And like I say, these individuals are going to make bad plays. That's why they have 20 million plus, 100 million plus, 500 million plus, a billion plus under asset management. They're not going to put it into a bad deal. If they do, it's rare. And like I said, if they do, they better be prepared to lose their job, especially if they're not a part of the family. So thank you all for tuning in live. Wealth versus riches, family wealth versus individual riches, or family wealth versus rich individuals. Let's talk about it. Let's grow our wealth together. And if not, no big deal. I'm sure you all are doing your own thing and, making it a point to grow wealth. But I think that's how you all should look at it, and do the same exact thing. So peace and blessings to you all. If you have any questions, I'll stay on for a minute. But other than that, it's just been an awesome week so far. A lot of good things are going on. I know it's the end of the year, and it's funny because I'm sitting around asset managers at the end of the year, whereas a lot of people are, hunkering down, kind of cooling down after Thanksgiving. After Thanksgiving, everybody supposedly shuts down. Well, not these asset managers. But for some odd reason, you got people cooling down. These individuals are sitting there networking together, working together. And the first quarter of next year is just going to be on fire. So thank you all for tuning in live or listening to replay this far. Do appreciate you all greatly. And thank you all so much. And peace. And just enjoy the rest of your day. Share the videos with people. Get your friends and family attracted to that wealth mentality. Make sure that we're dealing in the proper structures and making sure that we can get the proper capital and finance to finance the entities that we're looking to do. And that just comes from being in the environment. So I hope that the Vault page provides that to you all. And like I say, just continue to share and like, and continue to digest the information. The way you're going to get rid of your old program is by continuously putting in new content. That's the way you get rid of bad habits. So thank you all. Peace, peace. Appreciate you all. Moneymaker, Bomo, Clyde. Thank you all. Talk to you all soon. Peace and blessings.